Let's talk about Coinbase, stock symbol COIN. Reported earnings missed in a pretty big way. And you'd think that the stock would probably be selling off like 10, 15, maybe even 20%, but it's not. It's selling off, but it's only selling off to the tune of about 3% following their earnings report that came out after the bell. So in this video, with that in mind, with the fact that it is showing a little bit of weakness here, and it could still even get worse, but nonetheless, initially, not that bad of a report. What I want to do in this video is I want to analyze the charts. I want to go through the technicals of it and see if there's a opportunity from a swing trading standpoint to get long on this stock. And so I'm going to go through the different time frames and just figure out what the best reward risk ratio scenario is for any potential trade setups that might be out there. So let's go ahead and get on that right now. So when it comes to Coinbase, you have this huge basing pattern that formed, and this went all the way back to 2022 and didn't actually break out until later in 2023, but it was this huge inverse head and shoulders pattern. So you had a left shoulder right there, then you had a head, and then you had a right shoulder. And then this stock, it had a fantastic breakout going from 117 at the breakout level all the way up to 187. I mean, that's like the things that you dream of as a swing trader, is that kind of a solid move with really no pullback that takes place. Well, it did eventually pull back, but in the meantime, you had a huge opportunity to go from 117 to 187. During that pullback, it comes all the way back down to this 115, 116 level. There's a slight little dip on this breakout level, which is why it's a little bit lower than where it actually broke out at. And it held that breakout level. It held the breakout level, and then it bounced up once again, this time going even higher than before. It wasn't a perfect, straight path higher, but it still went from 116 all the way up to 282. So more than a double on that particular chart. And then, of course, you waffled around a little bit in 2024, dipped down a little bit, but not too bad, and then it came roaring back. So going back to about late November, early December, where it peaked out at, it has been in a series of lower lows and lower highs. So you have your lower lows right there, lower highs, another series of lower lows and lower highs, and then finally where it has, at least for now, bottomed out. And you can see where it bottomed out was with a pretty significant support level going all the way back to September of last year. So this support level did held pretty well, and it bounced. Now let's go ahead and get a little bit more of a big picture take on this one. And what we'll do is we'll draw this trend line going from 2023 onward. And you can see as well, when this stock started initially rallying, and it rallied pretty well off of it, and then all of a sudden it took off. Finally, here in 2025, it pulled back to this level, pulled back to this price level support as well, held those levels, and then it's bounced ever since. So is there a play in all of this? And the answer is yes. And right here, you have an inverse head and shoulders pattern once again. Now, I just talked about an inverse head and shoulders pattern. This one was a little bit more developed over a longer period of time, which is oftentimes when you get these longer basing patterns, they can lead to some explosive moves, but more so over a longer period of time. This was formed over the course of more than a year, about a year and a half or so. This one here has only been forming since March. So very much more short term, but well developed. This is probably what I would consider a textbook pattern because it is very, very symmetrical and it pretty much follows the textbook. That's the reason why I call it a textbook pattern. So you have this neckline right here, and that might be the only thing that's a little bit off on it, is that it's not a flat neckline. It actually slopes higher a little bit. However, still an inverse head and shoulders pattern. So you got the left shoulder right there, you got the head, and you got the right shoulder. Right shoulder almost like forms this like bull flag pattern. So you could even make a case right there that it's breaking out of a bull flag pattern. The reason why I wouldn't trade that is because you have the neckline just above, and so if you play the breakout pattern of that bull flag, you have some resistance at 214 it may stall out at. So to me, it makes more sense to wait for the inverse head and shoulders pattern to confirm and then to play the breakout there. So where does this confirm at? It confirms at around 216 is about what I would say is the breakout level on coin. Now, because this is sloping higher, that can change each day. For the stop loss, if we're assuming a 216 entry, then the stop loss is probably going to be really the nearest stop loss is going to be below the lows from Tuesday of this week. So you put it below the lows from Tuesday, then you're starting to talk about a stop loss below 193.34. We're talking about entry at 216, talking about $23 of a stop loss, which is a little bit more than $10 a share. That's getting pretty high up there. Now, that doesn't mean that it can't work for some people. It doesn't really work for me because I don't like to take on a big amount of risk, especially in a stock like Coinbase that has had headline risks. We're also in a market that has full of headline risk as well right now. But nonetheless, it's a nice inverse head and shoulders pattern. And for some people, whether you might be using option strategies or just buying the equities outright, it may be something that works for your trading strategy. So I want to throw that out there. Again, it may not work for everybody's, but this is a nice inverse head and shoulders pattern. I don't believe in getting long just so you can reduce the risk before the breakout level. And the reason why I say that is because far too often we can make assumptions about the market that never happens. And so if you don't wait for the breakout to happen, you get long and then it completely falls apart. Then you just took on an unnecessary risk. You took on an unnecessary loss, and that could have been completely avoided. And that does make an impact on your overall portfolio. So what's the takeaway here? Well, remember, Coin just reported earnings. We don't even know exactly how it's going to play out tomorrow. You may see that dip buying mentality. It's very prevalent right now with the stock market. You just saw PLTR a couple of days ago report some pretty dismal earnings in terms of how it responded to the earnings report. It sank down, over 9%, and then it's bounced right back again. And that may happen. It may take a couple of days for Coinbase to sort of figure things out, and then it may try to break out later on. And so I would wait for that breakout to take place before you get long, and definitely don't try to buy the dip because it could keep dipping. That just doesn't make sense. And so if the earnings tomorrow does take it down below this stop loss or key trade support that I've identified right here as a potential place to put your stops, if it takes that out, then I wouldn't want to get into it at that point because then this chart's starting to get a little bit skewed. We need it to hold this level, come back up, break through the neckline, and then you have a pretty good trade setup there on your hands. If you enjoyed this video, make sure to like and subscribe and let me know down in the comments below, what is your thoughts on Coinbase? Do you think that this stock is going higher? Do you think it's going to go up with Bitcoin? Or do you think that this one is a pattern that's just not going to fulfill its full potential? Let me know down in the comments below. Thank you guys, and God bless.